All right, let's get into it. If you've ever looked at a financial chart and just felt completely overwhelmed, you are definitely not alone. But what if there was a way to cut through all that noise? Today, we're going to break down a really powerful analytical framework that turns all that raw data into clear, explainable intelligence. For most of us, let's be honest, the financial markets just look like chaos. You've got prices jumping all over the place, signals flashing. It's a really intimidating world, just packed with volatility and uncertainty.
So that leads to the big question, right? How are you supposed to make sense of any of it? How can you possibly navigate this kind of environment without just getting completely lost?
I mean, look at a chart like this. With all its candlesticks and indicators, it honestly feels like trying to fly a plane straight through a thunderstorm with no instruments. You can feel the turbulence, for sure, but you have no reliable way of knowing which way is up.
But what if you could change that? Imagine if you had a system, kind of like a pilot's dashboard in a modern cockpit, that could take all that crazy, chaotic data and just turn it into a clear, understandable flight path.
And that's exactly where something called a layered analytical architecture comes in. It's basically a decision support system that doesn't just throw data at you. Instead, it converts raw price movement into structured, explainable intelligence. Think of it as your financial cockpit, built for absolute clarity. So here's our flight plan for this explainer. We're going to start with the pre-flight plan, then learn to read the cockpit instruments, scan the weather radar, fly through a real-world case study, and finally, land at a place of clarity.
Every good flight starts with a solid plan. And in this framework, that plan is called the opening structure. It's all about setting the stage for the day ahead.
So the opening structure is literally your pre-flight check. Before things even really get going, you already have your key levels defined, your pivot points, support, and resistance. This lets you objectively evaluate the market's first moves, so you're not just having a knee-jerk reaction to a big price gap at the open. And the logic behind it is beautifully simple. First, you predefine those critical levels. Second, you establish a predicted opening range. And third, you just watch. You see if the live price is being accepted into a new zone or if it's getting rejected. It forces you to have a disciplined, objective start to the day. Okay, pre-flight check is complete. Now let's move into the cockpit and look at our main instruments. These are the dynamic tools that tell us exactly what's happening mid-flight. Our first instrument is the bias table. The best way to think about this is like your autopilot status. It crunches live data and classifies the market into one of three simple states: bullish, neutral, or bearish. In pilot terms, it's telling you if your plane is climbing, cruising, or descending. And what's so powerful about this is how it quantifies that market feeling. It doesn't just say, oh, it's bearish. It gives it a hard number, like this strong bearish signal, which has a score of -20. It's a specific, data-driven reading of what's going on. Now, our next instrument is all about distinguishing between a little bit of chop and a serious problem. A corrective pullback, that's just minor turbulence, a temporary dip that doesn't really change your overall flight path. But a trend continuation signal, well, that's a genuine loss of altitude. It's an escalating move that confirms you're heading downwards. This system is designed to tell you the crucial difference. All right, so we're reading our instruments, we know our status, now it's time to look at the big picture. Let's scan the weather radar. In this system, that's the contextual clouds. These red and green clouds, they work just like you'd expect a weather radar to. It's the final layer of the system, and it takes all that complex data we've been talking about, the structure, the bias, everything, and boils it down into a simple, high-level visual of the dominant market direction. And its purpose is just so simple and powerful. The source material puts it perfectly. The clouds are there for showing at a glance whether you are flying through clear skies or an approaching storm. Green clouds, you've got clear skies. Red clouds, a storm's rolling in. It's that intuitive.
So the theory sounds great, right? But let's put this whole navigation system to the test. Let's fly through some actual turbulence with a case study from the Japanese and South Korean markets. Okay, so here are the specifics. The date is December 24th, 2025. We're looking at two different stocks, one from Japan and one from South Korea. And we're using 5-minute charts to see how things play out during the day. Right at the start of the session, you can see how this all comes together. Over on the left, the Japanese market is already flashing a strong bearish signal with that -20 score. But on the right, the South Korean market opens neutral. So our instruments are giving us two totally different readings at the start. But then look what happens as the day moves on. In both markets, the weather radar turns red. You get these persistent red clouds that visually confirm that a sustained negative trend took over. The storm hit both markets, and that high-level visual made the situation crystal clear. And this really is the whole point. It's about how this kind of integrated system can take us from that overwhelming feeling of market chaos to a place of structured clarity. It's all about the power of explainable intelligence. When you put all the pieces together, you get this really clear, logical story. The opening structure sets the initial context. The bias table tells you the current state of play. The retracement signals check if a trend is real, and finally, the clouds give you that dead simple, high-level picture. Each layer just builds on the last.
And this is so important to understand. The goal of a system like this is not to be some magic crystal ball that predicts the future. The real goal is to create structured, logical, and, most importantly, explainable intelligence about what's happening right now. It's about clarity, not prophecy.
So, I'll just leave you with this one question to think about. In a world that is just drowning in complex data, what's actually more powerful? Is it a tool that claims it can predict the future, or is it a tool that gives you the power to clearly and confidently explain the present?